You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast. And today, I've got a very special program, but I want to start out by asking you this. When you talk to wealth advisors, the ones I tell you to stay away from, what do they tell you? They tell you that you've got to have a diversified portfolio. And to them, all that means is stocks and bonds. Well, I believe that a portfolio diversification is an important thing to have, but diversification should mean more than just choosing between two classes of paper that react to the emotional whims of normal geopolitical undulations. Diversification also means having exposure to different asset classes, and if you're investing in real estate, for example, you might consider investing not only in apartment buildings, but office buildings or assisted living facilities, etc., etc. You might want to invest in farmland or businesses too while you're at it, and you might even want to invest outside of the country. So it may sound dangerous to invest outside the country, but for those of you who throw money into stocks and bonds, I pretty much guarantee you that you have some international exposure already and you just don't know it. And you don't know it because you're just blind to what's in your portfolio, which I think is actually more dangerous than investing directly in something that you know. So furthermore, right now, the dollar is actually really, really strong. So what does that mean? It means that we have really good buying power overseas. It also means as the dollar weakens, if you go back to some of my previous episodes, you know that I believe is imminent. It's what the Federal Reserve wants right now. And if that happens, the dollar weakens, then your international investment becomes, relatively speaking, more valuable. Now, what if I told you that you actually do have opportunities out there to leverage international investments in something that might even be highly addictive, has recently shown tremendous health benefits, and has a huge global market that's growing every day? Well, you'd probably want to learn more. And so when we come back, we're going to do exactly that as we talk to David Sewell of International Coffee Farms.
If you love real estate and have always wanted to own your own business, listen up. The Real Estate Guys and their panel of experts want to teach you how to go full-time fast in the real estate syndication business. These next few years may go down in history as one of the best times ever to acquire investment real estate. There are deals everywhere if you know where to look and how to assemble the resources. The Secrets of Successful Syndication seminar will show you how to make big money doing big deals from a team of experts that have syndicated projects totaling more than $1 billion. Don't wait for someone to give you a raise or create a job for you. Attend the Secrets of Successful Syndication and learn how to build a team, raise capital, find deals, and make full-time money in 6 months or less. Go to realestateguysradio.com and click on events. All the big players use syndication as a way to diversify risk, optimize profits, and earn big money. You can too. Go to realestateguysradio.com and click on events.
Welcome back, everybody. Today, my guest is David Sewell, his founder of the International Coffee Farm. David is a Canadian with an extensive background in private equity and venture capital, who in recent years has turned his attention to Latin America, specifically coffee in Panama. David, welcome to the program.
Thank you very much. Pleased to be here.
So tell us a little bit about your background first, David. I mean, you're a Canadian finance guy who obviously has had a great career, and now you live in Panama City and you're farming coffee. So how'd you get there?
It's quite the journey, that's for sure. I lived in Canada until 1989, and then I left and went offshore. And as I tell everybody why I left, I went looking for warmer weather and lower taxes, and I found both. I had served in the Canadian Navy as a combat officer in a destroyer for 12 years, in 1968 till 80. Went back to school after I got out of the Navy and did my MBA and did some work in the corporate world for a few years, realizing fairly quickly that I was making money for other people and not making enough for myself. So I decided to stop that and left the country in 89, as I said, looking for other opportunities, and went on to Mexico. Didn't really like doing anything there much because there's no rule of law, and there still isn't. I went on from there to Costa Rica, did a little bit of real estate development work there, enjoyed the place immensely. It's absolutely beautiful when it comes to the ecology, but the infrastructure is not very good and still hasn't improved any in the last 10 or 15 years. Moved on from there, took a tour into Argentina. Really, really liked Argentina and stayed for almost 2 years. But then I realized that I'd overcorrected. I went too far south. That warmer weather part wasn't there. They got snow down there in Buenos Aires.
Oh, wow.
So I had to correct my path and go a little further north.
You went back to Canada on the other side, right?
Well, actually, I didn't. I had worked in the U.S. for quite a few years, so I went back to the U.S. with a friend of mine in an internet company for 2 or 3 years. Finally, come 2006, then I was 56, and it was time to retire, move on to somewhere else, and see what's going to happen with the rest of my life. So my wife and I decided that Panama would be a good spot. I'd been here before and had decided that this would likely be the best place for us to go. So we arrived here in 2007 and have been here ever since.
Good for you. So we're talking today a little bit about specialty coffee. Can you tell us exactly what that means? We can get some sense for it. There's more to it than just, this is good coffee, right?
That's right. Yeah, there's two kinds of coffee generally in the world. Robusta, that's the stuff you get in the can, grocery store, and Folgers or anything else. It's grown in low-lying countries all around the world, large quantities in Vietnam and Indonesia and lots of other places. Reasonably good coffee, but it's commercial coffee. Arabica is the other varietal that can be grown, usually at high altitudes and different circumstances, let's put it this way. That coffee is what becomes specialty coffee. It's not specialty coffee when it's grown, but it is specialty coffee when it is produced. And that means simply that you need to be able to pick the cherries one by one. You manage a tree individually, and there's 4,000 or 5,000 trees in a hectare, or in a 700, 800, 900 in an acre. These trees are managed individually. Cherries are, when ripe, picked individually. Actually, when they are exactly ripe, not 2 days before or 2 days after, but when they are exactly perfect. And the people that pick the cherries pass through the farms multiple times, picking cherries one by one so that they are to become specialty. Those cherries are then processed in a very particular manner in a wet and dry coffee processing mill, of which we have our own. We just finished building a brand new state-of-the-art 5-star mill with imported equipment from the best manufacturer in the world in Brazil. And that coffee that we hand-pick individually, those cherries, are processed in our mill very specifically to generate specialty coffee. Specialty coffee itself, having been grown, picked, harvested, and processed properly, is coffee that is considered zero defect. So in a pound of coffee with all those beans in that bag, you won't find one defective bean in that bag if it's very high-end specialty coffee. Of course, commercial coffee, you'll find all kinds of problems in there, but specialty coffee, you won't. Specialty coffee is defined specifically by the Specialty Coffee Association of America and others, Europe, for example, as well, and Panama, who have a rating system that is very complex that defines what specialty coffee is. It's a process whereby the coffee is ground specifically, is brewed specifically, is cupped specifically by professionals who are called Q graders, who are people who really know what they're doing. They assign values to the coffee in approximately 10 different categories while they're cupping it, and they come up with a score.
Sort of like sommeliers for wine?
Exactly the same thing. Wine Spectator started these numbers on bottles 15 years ago, and now you can go into the store and see a 91 and a little story about where the grape came from, and you know what you're buying and what you're getting, where it came from. Specialty coffee over the last 5 to 10 years has gone exactly the same path, and the numbers are almost the same. If it grades 80 to 100, then that's specialty coffee. I've never seen one grade higher than 94, and that was a particular varietal here in Panama last year. Generally, very good coffee is 83 to 87, and once you're up those numbers in the 85 to 87 range, you're in the top 3% of the coffees in the world.
So when we go to Starbucks, is that what we're buying? Is it specialty coffee, or is it not necessarily?
That's what they're promoting. It's not necessarily always specialty coffee. Starbucks does buy coffee from the farm gate. They do buy Arabica, so that's the proper coffee for specialty coffee. They do buy it from the farm gate, and sometimes they end up mixing the coffee from various farms because they have such a huge operation and they have so much demand for coffee that it's really, really difficult for them to keep up. So they have a particular brand of their own. They buy coffee from Panama, which is specialty coffee. They sell it as a single origin, direct trade, traceable kind of coffee, which are all adjectives additives that apply to specialty coffee, and they do sell that in their stores. So you can buy $15, $20, $25, $30 a pound coffee directly from Panama, for example, and many other countries in their stores. For their own restaurant blend, they have to mix it just to keep up with the volumes. Then they roast it pretty heavily to get flavor into it because it's necessary to be able to carry the coffee taste through all of the additives that most people seem to like to put in their coffee these days.
Right. Now, how big is this market? Because obviously Starbucks is huge across the world. It seems like as countries develop and they become more quote-unquote westernized, they start to drink more coffee. So can you give us a sense for how big this market is and what kind of growth you see there?
It is a big market, and you're very right. As the developing countries come into the 21st century, coffee becomes a status symbol. You're seen drinking coffee in these countries like China and India where there's huge populations. It's a status symbol. Coffee business itself is a $90 billion business around the world. The only other business that is larger than coffee in dollar terms is oil. So it gives you an idea how big a business it is. It's a long ways between number one and number two in dollar bills, but it's still ranked number two behind oil as the largest traded commodity in the world in dollar terms. So $90 billion business, approximately 16% of that business right now is specialty coffee. So it's a significant number. And more importantly, that niche is growing at an annual clip of 20%. You're seeing a double every 3 years or so. We've been in this business 4 years now with this business model, and arguably we've seen it double in size.
So you've got an interesting model of international coffee farms. Can you tell us a little bit about the business model, sort of the executive summary, if you would?
Sure. What we do is we buy underperforming commercial coffee farms and we turn them around into specialty coffee farms. While we're doing that, over a 3-year period or so, we take the farm we buy and subdivide it into half-acre parcels. Each of these half-acre parcels is available to individuals who would like to own a piece of their own producing coffee farm in Panama. Why would you want to do that? It's really an offshore hard asset where you have money out of the country that you live in, the United States, principally Canada, Europe, Japan, Middle East, where people are coming from as our owners. You have an offshore hard asset, money out of the country, diversification, and you have a deed to that property as security. So it's yours. So you own something. You're not just a shareholder in a company with a piece of paper in your hand that says you might get some part of a dividend. You actually own a hard asset offshore. That hard asset is turnkey managed for you by us. So you have a professional group of people working all day long, growing coffee on your behalf, providing you a passive income. So deeded property, offshore hard asset, passive turnkey income. That's the reasons that most people do it. With the return on investment pro forma is an internal rate of return of 12%. IRR, or easily understood as just an average annual yield.
What period of time are you using for that?
We use a 20-year slice from the start to the end of 20 years, and we use a discount rate of 10%.
Got it. One interesting thing that you mentioned was that these are deeded pieces of land, so presumably you can sell them over time if you decided to do so.
That's correct. It's your land, and you can do what you want with it. First thing we would do if you did want to sell, once you see the numbers, and if people are interested, and we talk about it at the end of this, how to get to it, you see the numbers, after the first 4 to 6 years, 5 to 7 years, everything is really kicked in, full production on all the farms. Turnaround is complete. All of our art of coffee science, as we call it, our secret sauce is all mixed into this. It's humming along nicely. And you start to look at the numbers and you see double-digit returns annually up in the 20, 22, 25% a year range.
How long do you think that would take to get to there?
7 to 10 years. And in the 4 to 7 years, you're in 12, 14, 16% range annually. So the numbers are pretty good. So we jokingly say the first thing we're going to do is give you a psychiatric examination if you really want to sell your property, because where are you going to find a reinvestment opportunity with a 22% IRR?
Right.
So that's first thing. But you can, seriously, you can sell it anytime you want. It's a 3-year hold minimum to get that turnaround done. You don't want to sell in that length of time because the money that you're paying for the property includes the development costs. And if you get out too soon, you're not going to reap the benefits of those costs. So you want to keep it that long at least. We have a first right of refusal of the company to buy it from you at an agreed upon price that would represent fair market value. And fair market value can easily be established usually because that's whatever we're selling parcels for at that time would likely be the fair market value. We would buy that parcel to keep you from selling it to a third party who might be a Chinese sock manufacturer that wants to put a plant in the middle of my coffee farm. That's not going to happen. So that's the exit strategy if you would want one.
Although presumably you're factoring in the fact that it's producing coffee at that point as opposed to being a fresh piece of land.
Yeah.
Yeah.
And so the price will be appropriate,
Right.
based on what we're selling those parcels for.
So 12% IRR over 20 years. Now, I'm curious a little bit about that projection because there's a lot of things going on in the world. And you mentioned, for example, 20% clip in the growth of this industry for one thing. We don't know what's going to happen with inflation in the U.S., and you're talking about an asset that is in another country. Have you factored in some of these things? It's difficult to do, but I'm curious how you do that over a period of 20 years.
Yeah, we have a real growth rate built into it and an inflation growth rate built into it so that we can forecast as best you can 10 years, 20 years out from now what the number is going to be. We have a real component and an inflation component in there. It's a dollarized economy, US dollar economy in Panama, so that takes away some of the foreign currency exchange risk, or takes away all of it, actually.
Right.
Business risk is really low. It's coffee. You own the land. It's been going on for hundreds and hundreds of years. It's quite likely to keep going on. We don't charge a turnkey management fee at all. We're in the deal with all of the owners as well, so we share at the bottom line with them to get our return. So there's no fees or preferential numbers up front. And the IRR is calculated with a future value of the land at zero. I don't know what the future value of the land could be in 20 years, but I know it's not going to be much less than zero.
Is this open to everyone, or is it accredited investors only? Or?
No, it's open to everyone. It's a real estate purchase. So what you're buying is a half-acre parcel producing coffee farm in Panama. So it's a real estate purchase, so there are no accreditation requirements at all.
In terms of just the taxation of that, that would be considered passive income? Presumably, you're not selling anything. This is not capital gains unless you sell the property.
Correct.
Well, that sounds great. Now, this is an interesting business model because it's not just about making money. You're actually doing a lot of good out there for the local farmers. Can you tell us a little bit about the sort of the social aspect of your business?
We believe in 3 pillars of sustainability. 1 being economic, of course. If you don't make any money, you can't stay around very long. 2, green or environmental, which a lot of people pay service to. Got to leave the land better than you found it for the future generations. But we also add a 3rd leg to that table, which is social sustainability. And we believe that the people that are working with us and for us that are producing our coffee are equally as important, if not more important, than any other inputs into the business model. So we take the farm revenues, for example, and to limit the risk as well as to the location of your parcel, it's really not important where you are on the farm because we pool the revenues of the farm together and we pool the expenses of the entire farm together to eliminate the location risk of your parcel in that farm. But once we have our revenues established, we take the direct costs away from our revenues for the farm, that gross operating income, 20% of which is reserved for our social sustainability program. 20% goes towards improving the lives of the coffee workers, all the way from our general manager, who's a sophisticated guy, right down to the least sophisticated 18-year-old farm helper, farm hand, who, when he receives his bonus check at the end of the year, has no clue what a bonus even is. And from there, we take the socially sustainable funding and we improve their living conditions. They're left in deplorable living conditions by their own people generally. The farmers that own the farms don't really treat the farm hands very well. They're native Panamanian Indians that do the farming here. They have been doing it for centuries. So we've taken their living conditions and remodeled the buildings, put electricity in, taken the old wooden beds out and welded up new steel beds, put 5-inch mattresses on the hard wood board that they've been sleeping on, sealed up the floor so that tarantulas and spiders and scorpions can't come up through the holes in the floor and bite the kids on the feet because everybody's barefoot. We take the latrine and trash it, and we build showers, running water, flush toilets, place for them to wash their clothes. All of this goes into a septic tank and a distribution field, a drainage field, so it's sanitary and sustainable. We put better clothing on their backs. They don't have to tie a hefty garbage bag around their shoulders to protect themselves from the rain while they're picking coffee, which is the case in many farms here. They get Helly Hansen rain gear. They're comfortable, they're warm, they're dry. They do a good job. And it's not all altruistic. I mean, obviously, if we have these people more comfortable, they're going to do a better job during the day. This is a challenging objective, is to train these people to not strip those branches and destroy next year's crop by ripping off the flowers and all of the buds, but by taking an individual cherry, 1 cherry at a time, and putting it in your 5-gallon bucket and filling up that 5-gallon bucket over and over and over again every day. So they need to be dressed properly, to have proper safety equipment on, etc. Then we go a little further to make their work life easier, and rather than, for example, have a hand pump when they're spraying fertilizer on the trees and they're pumping a handle 4,000 times a day to get the pressure into the tank to spray, we buy motorized sprayers. They cost quite a bit more. We use the funding from the Socially Sustainable Program to pay for those things, and they last for 2 or 3 years, and the farmers have an easier job all day. Their workload is less, and they do 3 times as much coverage while they're spraying. So all of those things get mixed up together in what we call social sustainability to improve the lives of the coffee workers. And we have a funny little statement in some of our press releases that say, happy workers equals happy coffee.
That's great. Makes sense. So I guess the question here is for everybody now, from my perspective and what you're talking about, you've got a socially responsible, highly profitable business plan in an industry growing at a 20% clip globally. This sounds pretty good, right? Now, I guess one of the things that's going to come up when we talk to people in my audience, the Wealth Formula podcast listeners tend to be highly educated, high-paid professionals like doctors, engineers, and attorneys, and they might not actually be used to the idea of investing overseas. So I just want to ask a few questions that might be coming to their minds, such as, what does the U.S. government think about these kinds of investments compared to other investments? Do they frown upon them? Is it going to be difficult around tax time? Can you talk about that a little bit?
You talking about before November 8th or after November 8th?
Oh, well, actually, maybe you can clarify for us if you think it'll make a difference.
They're all the same as far as I'm concerned.
Sure.
It's lesser of two evils. But the U.S. government really doesn't have anything to say about this. We're a foreign corporation operating farms in a foreign country. We don't provide W-2s or anything else for the distributions. You being listener as an American citizen, they're responsible for their own tax declarations based on that worldwide taxation policy of the United States. We don't have any issues. We've been doing this for over 4 years now. We have 850 or 900 half-acre parcels owned by individuals offshore from Panama, the vast majority of which are in the U.S. Deeds are issued and recorded here. There's no issues there. You can use your self-directed IRA account to own these parcels. It's simply a real estate purchase, so the self-directed IRA custodians who have responsibility for your funds but not your investment decisions have no issues with this. I don't see how the U.S. government has any influence.
Does the Panamanian government tax this as well, and is that already sort of calculated in on the on your projections?
Yeah, the Panamanian business tax is included in the projections as a cost, so that's already all paid for before you get to that 12%.
Got it.
Right? And they don't tax you individually here.
Well, that's nice. One other question is, again, you're talking about an overseas investment. Let's talk about the Panamanian government. I mean, you mentioned a little bit about why you're not doing business in Mexico, and not all of Latin America is all that stable. Tell us about Panama, why you think that Panama in particular is a good place in terms of stability.
Panama has an extremely strong economy. During the go-go days up to 2008 or so, economy here was growing at an annual rate of about 11%. A number that even China would love to have. At the lowest part of the debacle in 2008 and 9, dropped to 3.2. I mean, the U.S. is yet to recover to anywhere near that number, never mind operate at that low a number, and the economy here is ticking along now at 6% or so on an average annual basis. So it's strong economy. As the Panama Canal here, huge amounts of revenues flow to Panama from that canal. Old canal, when it was just 3 locks, was $900 million to $1 billion a year coming into the country, and now it's doubled to $1.8 billion, going forward to a projected $2.4 billion a year coming into the economy here. Keep in mind, there's only 4 million people living here. So,
wow.
Strong economy. Then based on all kinds of other factors, they have an extremely large international banking industry. If 80 offshore banks want to have their international headquarters here, then I don't have a problem with doing business here. These guys are pretty sophisticated, and that huge banking system pays annual fees to this government, large numbers, to be able to have that banking license, et cetera, et cetera. So there's a continuous flow of capital into the economy from that source that really doesn't have any cost. I mean, it's their licenses and fees. The insurance industry is the same. Very large number of international insurance companies have their headquarters here. They pay huge fees to the government. So the maritime industry, like 70 or 80, maybe even 90% of all the international shipping is registered in Panama. You start to look at the back end of a ship and you see Panama on there and a Panama flag. There's a reason behind that. And the maritime industry uses Panama for their registration. So those, however, hundreds of thousands of ships that are running around the world every day pay fees to Panama. So Panama has a solid economy. They also are very American-oriented. I mean, the Americans were here for 100 years, finishing the canal and running the canal until they turned it over in 1991. 1929. Panamanians have done an extremely good job of running it since then, and within 3 years of taking it over, they doubled the bottom line profits in the canal just from their own management skills. They have a great system going on here. They have an Americanized economy. I call it a halfway house for Americans. It's an easy place to come to.
And Canadians too, I guess.
Yeah, and Canadians too, but it's 30% more expensive for them right now with the dollar versus the Canadian dollar. But you can come here and it's feet, pounds, inches, gallons, miles. It's U.S. dollars. People speak English. It's only 2.5 hours away from Miami or 4 hours from Houston. It's easy to get back to the grandkids. They like Americans here. They're used to Americans here. The roads are perfect shape because they were built with American technology and know-how. So, you don't get the crater potholes you get in Costa Rica. You drive your car right into and disappear. So the infrastructure is in great shape. Government here, ever since they took Noriega away, it's a democracy and it runs smoothly. They're elected for 5 years and they can't get re-elected consecutively. So the president's got 5 years. He's out, gone. Then he can't come back until he at least sits out a 5-year term. And nobody's come back yet. So 5-year terms for the president, democracy, well-run economy, plenty of money, cash flow. The average per capita income here, for example, is somewhere in the $15,000 range, and doesn't mean much to most people, absolutely, but number is 48 or 50,000 in the U.S., but in comparison purposes in Central America, it's a big number. Next door in Costa Rica, the same number is probably $5,000 or $6,000. Next door to that in Nicaragua, the same number is probably $2,000. Salvador, Honduras, Guatemala, $2,000.
Wow.
They don't have very much money, but Panama, looking at $15,000 as a very, very solid middle class. People own their own homes here. Everybody has a reasonably new car. You can go to the bank and get a car at the same price you can get it in the States. You put 10% down and you get a loan for 7 years. You pay. Everything's the same. You can buy your own house. Mortgages are subsidized. Kitchen gas is subsidized. Your diesel fuel or your gas for your car is subsidized. Your electricity is subsidized. The company has money, and it's a well-run democracy that looks after the people. They have holes in what they do. Their education system needs work. I mean, the infrastructure in their education system is abysmal. It needs work. There are lots of other things to do. It's a third world country, but it's got first world clothes on it, and it's looking very, very good. Very strong future. So I'm really bullish on this country.
So how much does a half parcel of this land cost, this coffee production?
A half-acre parcel is $18,000 U.S. and 5% transfer tax cost. So it's $900 for that. So it's $18,900 in total.
So it's not a huge barrier of entry. So if somebody wants to dip their toes in this and give it a try. David, tell me about these farm visits that you have. I've seen some of these on your website. I think it's for interested investors. Is that right?
We call it come down and kick the trees. Instead of kicking the tires. So
right.
you can do that at $18,900. It's not a huge dollar investment. It's purposely structured that way so that people can, and most people do, make an investment long before they come here. Some people do come and kick the trees, but you can do that anytime before make an investment, after you make an investment, doesn't matter. The tours are held 3 or 4 times a year. Anytime you come, should you have an interest in investing in the farms, or you're already an owner and you're coming to Panama on a vacation outside the time of the group tours, and you're coming to Boquete, just let us know and we'll give you your own private tour. So you'll get the same experience on the farm tour that you would get with the group tour without the dynamics of all the other people being around. The group tour, next one is November 19, 2021, Friday, Saturday, Sunday weekend, limited to 10 or a dozen people. I think half of those seats are taken now. It's for adults only. But what happens then is everybody gets together and we spend a Friday afternoon together. You have a little wine and cheese party. We go out for dinner. We get to know each other socially. We spend all day Saturday climbing around coffee farms. And they're steep. They're high altitude. It's bright and sunny out there, particularly in the mornings and the rainy season. It's a workout for the day.
Well, sounds like fun. I mean,
it's fun. It's interesting.
Price of admission right there.
Yeah, and the price of admission is free, of course. All you have to do is get here, and we'll cover all the transportation and everything else for you. You'll pay for your hotel, but we'll host you for the first night, and we'll pay for all of the drinks and the dinners and the lunches and the breakfasts and the transportation, and we'll show you around. And you'll know a lot more about coffee when you come away than you did when you got here. We'll take you through the processing mill and show you how we wash the cherries and dry the cherries and store the cherries and hull them and peel them and classify them for export, so you'll learn all kinds of stuff. Sunday morning, we'll put you into a coffee cupping class in our own laboratory so that you can then learn how these SCAA, or the Specialty Coffee Association of America, Q graders, actually rank and grade coffee. So you'll get to do it hands-on. And Andres Lopez, our general manager, is a Q grader and a very qualified coffee guy, and will run that class for us, and he'll show you how to test the water and boil the water and how to put a cup the right way and how to sip and slurp and mark your numbers down, and you'll be a quasi-expert when you leave them.
So I'm sure we've got a lot of listeners potentially interested in at least learning more about what you're doing. So how can they get a hold of you?
Best way to learn more is to go to the website, which is www.internationalcoffeefarms.com. When you get on the site, lots of information, tons of videos, pictures, and testimonials, and all kinds of other information for you to read. Once you've processed that, and if you do want more information, there's a button called Getting Started. Click on that. You'll see my shiny little face there and a little introduction and a capture box for asking for your information. If you fill in that information and hit the Submit button, then automatically you'll get an introductory email which will explain the whole opportunity again in a summary form, and you'll get a 16-page 4-color brochure in the form of a frequently asked questions model that will probably answer 90% of the questions you have. All the questions we've ever been asked have all been put together in this booklet, and you get that automatically by hitting the Submit button. So then you can read all of that. If you have more questions, then we invite you to send us an email personally. Darren Doyle, my partner and the VP of Sales and Marketing, will answer you personally, and he'll answer any other questions you may have that haven't been answered in the booklet. Once you get to that stage, you can make a decision whether you want to go ahead or not. And part of the decision to go ahead would be to look at our purchase agreement, which is a grand sum of 2 pages, the ownership agreement, which is about 5 pages, and our pro forma financials. So you could look at all of that, and then that's where your decision comes for whether you invest or not. Precursor to getting information that is the purchase agreement, the operating agreement, and the pro forma financials is you must complete a non-compete, non-disclosure agreement with us before we issue that proprietary information to you.
That sounds pretty exciting. The other thing that our listeners can do if they want to, if it's easier, just shoot me an email at buck@wealthformula.com, and I will certainly compile these reports for you and make it easier if this sounds something you can't remember on how to get it. Anyway, hey, David, thank you so much for being on the show. This is a really exciting opportunity, and I want to thank you for sharing it with us. And
more than welcome.
I just wanted to remind our listeners of one thing, which is if you go to wealthformula.com right now, you can also download our special report on how to legally save thousands of dollars in taxes. And so go to wealthformula.com, and we will see you next time on Wealth Formula Podcast.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.